Happy Easter, options players. This is Michael, otherwise known as the Rice Pirate, making this video from Port Canaveral, Florida. I'm on a sailboat this week in a port. I don't think the sailboat sails, but we're staying on it, my son and I, for the week, and I'm going to be working remotely here for my day job and also putting out some videos and doing some trading this week. Wanted to get a video out today before the market open on Monday on Apple. And we will be taking this from a couple of different perspectives. The first perspective we're going to take is from a weekly perspective. And then I'm going to insert a little snippet of a video I made on March 8th on the 1030 dance. And then we'll take a look at Apple from the perspective of the daily. So hopefully we can get that out before the and get this published out there in the YouTube waves before market open on Monday. And then I'll do another video on Tuesday to see how that prognosis played out. I'm going to start with a brief disclaimer, as we are not investment advisory services, so please read through this. Just want to mention that we're not registered investment advisors or broker dealers and don't purport to tell or suggest which securities customers should buy or sell for themselves. You should always check with your licensed financial advisor or tax advisor to determine the suitability of any investment. It shouldn't be assumed that any methods, techniques, or indicators presented in these videos will be profitable or they'll not result in losses. Past results are not indicative of future results. Examples presented in these videos are for educational purposes only, so the setups are not solicitations of any order to buy or sell. The authors, publisher, and all affiliates assume no responsibility for your trading results, and that there is a high degree of risk in trading. We look at Apple from a weekly perspective. I see a couple of things happening. First of all, is that we, as we've mentioned, we've talked about 1030 dance, which I'll review here in a little bit, but essentially what happens is Apple and all other stocks are going to bounce between the upper Bollinger Band and the various 10 simple moving averages. So it'll cross the 10 many times, and we've had a really good run up, and we're starting to roll over. Okay, and we're also in some channels. I've got a couple of channels drawn here. We have the upper trend line, really kind of on the weekly, and we see that's on the daily as well. We got kind of a trend line coming up, even though it went below, it kind of acted as resistance, then it went up. And so I'm expecting that actually to provide a point of resistance in the future. The vertical line here actually is earnings. Earnings is coming up. And the other thing we have going on is we have the ADX and the DMI are starting to curl in, and we have this ADX starting to go down. So for me, this is a signal that we are kind of moving into a small downturn. So what I'm actually expecting is I'm expecting Apple to do one of two things by the time we get to earnings on a weekly basis. And I've got my hopes on one and less hopes on the other. But, you know, obviously when we're going into a weekly situation, we're dealing with two things. And ideally, we're going to see this kind of range over a couple of weeks. This means really that we could have a couple of different bars. We could have a bar that goes down and then another bar that goes up. So, create parallel. We could have something that kind of goes up, and we could have another bar that goes up like that. There's a couple of things that could happen by the time we get to earnings. But what I'm really expecting over the next week is my general gut feel is that we're going to get an initial pop on Monday if Trump doesn't do anything, but it may actually go down. If it doesn't pop and we open lower, it'll probably go higher. But what I'm expecting it actually to either open below the 10 SMA, which counts as a hit for me, and then of course it would go up from there, or it's going to open up above it and it's eventually going to go down. It potentially go down and close below that 10 SMA over the next week, certainly over the next 2 weeks. I would put my bets on that. Now, I put a big disclaimer in there. I'm currently in calls because I didn't think that Trump was going to do anything this weekend, and I figured there was a little bit of an overreaction that's going to actually open a lot higher. But I will be looking to move to puts from a weekly perspective. That's my general feeling. I don't know if I'm going to over the week, But certainly from a weekly perspective and my technical analysis, I do expect us to make an attempt at that 10 SMA, and that's healthy. As I mentioned, I produced a video back on March 8th of 2017 on the 1030 dance. The link can be found here. I'm not sure if you can be able to click on that, but you can certainly take a look on my YouTube channel to take a look at the full video, but a snippet of actually what the 1030 dance is shown here. During the course, you probably remember me talking about the 1030 dance and some of the theories that I have. It's really kind of looking at the stock market as from the perspective of a chess player on trying to anticipate moves for the future. The 1030 dance is all related to a movement of a stock from Bollinger Band to Bollinger Band. That's the upper Bollinger Band, and that down here is the lower Bollinger Band. And then how it relates to the movement of the 10, the 20, and the 30 simple moving averages. So this is the 10, the teal is the 20, and the blue is the 30 SMA. Generally, the theory goes is that once you hit a Bollinger Band, the price is going to want to retrace 2 times over the 10, 1 time over the 20, and then 1 time over the 30 before it moves on to the next Bollinger Band, either lower or upper. So the theory goes is that once we hit the Bollinger Band, of course you're going to have different shapes of different stocks. You're going to go down 1 time, constitute as a hit 1 time. Once you retrace up, we don't know where it's going to go up. Maybe it'll come here, maybe it'll come up here, but let's just say that's 1. We're going to get a second retrace below. We're going to come back up again. That's 2. The third hit is going to retrace to below the 20. It's got to come back up over the 10 again. That's 3. And the fourth time, it needs to come below the 30 and then come back up again. Okay, and that's 4. And usually what happens at that point is it will come back down to the lower Bollinger Band, or sometimes you might see it go back up to the next Bollinger Band up above. So that's 4. So this is all about the stock movement, and that doesn't mean it's a bullish or a bearish pattern. It's just, this is usually how it interacts. A lot of times what we see happen in bullish patterns is that the Bollinger Band, by the time it makes its 4th move, is well above where it was over here. Okay, so it all depends. Moving on to the Apple Daily, after looking at that 1030 dance, I've mentioned previously that with Apple, I believe that we've reset on that 1030 dance. We don't really have a true 1030 crossover, but we had such a big gap up on that earnings that I'm just going to reset it. And just kind of move forward with the theories in this way. So at this point, I was expecting some time to go below that 10, and it took a really long time. But the last highest point here, before it started moving down and hitting that, it was right here. So we had our first descent below the 10 SMA, and that counts as a hit number 1 when it goes above the 10 SMA. So that 1 actually is about here. Okay, but then we have the next highest here, so I just put that 1 there, and then we hit again. Okay, we have our second hit when it moves back above, so that's number 2, and then the third hit I'm expecting to go below the 20 SMA, and that's exactly what it did. It opened below the 20 SMA and then went up, but that counts as a hit. Once it goes back up, that's the third hit. It goes up, we have our highest point, and now we've come down, and lo and behold, what have we done? We've gone below the 30. So 2 times 10, 1 times 20, 1 times 30. So the expectation at this point is for us to go back up if we follow this pattern to validate that 4th hit, and then eventually go down. Okay. And we have another little thing happening here with the ADX and DMI. As some of you have seen some of my other theories regarding the 5-period DMI as well as ADX, is that when we have a zone exit, that's a signal that it could be reversing. So we have the negative DI in control over the positive DI with the zone exit. That means that we potentially can go back up. So my prognosis is going up. This is another reason from a technical perspective that I'm in calls. But once we do go above that 10 SMA on the daily, I am expecting that Apple will try to come back down, okay, and to the lower Bollinger Band, and my hope is it comes down to here, okay. And the reason I want it to come down here is because I would love to have a really big potential move on the earnings if we happen to go into earnings, or certainly it allow me to be in puts and gain in some volatility increase leading up to earnings. So that's generally what I see. Again, what I said is I'll put a video out again on Tuesday after market close on Monday to see what actually pans out and see if we got this right or not. And I always mention that hey, this is great advice when it works, but you know what? I'm wrong too. So let's see if we're right or wrong. To close this video off, to mention something about money management. Money management really is probably the most critical part of trading. If you don't have money management down in trading, you will lose, and you should not be trading if you're losing tons and tons of money because of a poor money management. And it's okay to be poor until a poor money management, but if you've learned how to do it the right way, you should always be able to make money in this market. So my recommendation is to never go into a trade without knowing where you're wrong, okay, or having a clear exit plan, whether it's a win or loss. And on this Apple potential, I have a very clear understanding of where I'm going to be wrong or where I'm going to be right, and I'm positioning myself in a way so that I can take a loss very quickly or let a winner run. But in the end, all that matters in trading is, first, did you make money on a sequence of trades? I expect to be in 5 to 10 trades on Apple over the next week. It doesn't matter whether I win one or lose one. What matters at the end of the week after my 5 or 10 trades and whether I've had a positive gain on all of those trades. Number two is your process quantifiable and repeatable? These are very, very critical in money management. The reason I'm mentioning this is because Steve and I have been developing a course. It's a 3-week course on money management. It's just about completed, and we're looking for expressions of interest for enrollment in that course. Space is going to be limited, so we're going to take pre-registration. So if you're interested in this, please contact Steve at optionplayers.com for more info, and we'll get a syllabus and a flyer out here over the next couple of days. Thanks for your attention, and I hope you've had a great Easter if you celebrate Easter. We'll hope for a great trading week next week. Bye. On this one.